Let me know if you can hear me properly. Hello, Ajwad. I still can't see my live here. But I can't see my live on my YouTube on the phone. I think there's something wrong. Yeah. Something wrong with the stream. 1 second. Ali, you can hear me? I'm checking because on my own YouTube here on the link I'm not live yet. I don't know what the issue is. I think there is an issue because on my phone I'm not live. Okay, now I'm live. Now I'm live on the phone. Okay. It took forever to be live. Let's give it a couple of minutes till someone join. In the meantime, let's see what Bitcoin is doing. Okay, perfect. So everyone is here. Just let me know that you can hear me good. In the meantime, I'll see what my short is doing. So I'm short from 45,500 around here. I'm in a good position now. But so Ali is here, Ashwag is here. Who's here more? Where is Amjad and Hamad? Let me know whoever is here before I start. So I'll start with Bitcoin and then I'll move to the most important topic of today. I'm so excited for this. This will change the way you trade or you even invest. The important about market structure is not about traders or short-term traders. It's any person who's investing. I'm talking about position trading, like if you're investing for a month, for example, for a year, you can even look at the market structure. So this is really the most important topic for today. I'm so excited about this. This changed my entire trading career when I start to focus more on market structure, and that happened like I I think maybe 8 months ago, to be honest. If I focused on market structure like a year ago, my whole portfolio would look much better now. Anyway, I think I'm gonna start now. I'll have a sip of water from my Call of Duty Black Code. Shout out to Man for this. Hello Sharajadi. Marcel, hello. This is, I don't know why, this is my favorite icon on YouTube. So I'll start with Bitcoin and then I'll move to the educational content. I'll record that and then I'll move on. So Bitcoin. I'll not go through the high time frame. I went through this last week, but let me give you a fresh on that. Last week, I think on Wednesday, I made a video about Bitcoin, and then on Thursday stream, we're talking about this. I just explained that we had this full channel since January last year, and if we look at the price dip down under the value area low, and then now bouncing back. So I'm not gonna go through this full range. Let's dive down on what's happening on the low time frame. So just to follow up, last week on the stream we were here, around here. Last Thursday, it was February 30th, around here, this area. So I had a video on Wednesday when the price was here, and I said if Bitcoin lose the 3,800 level, the first level to watch is around 36, and then another level is around 35. And here I was looking to swing failure these lows, take these lows, and fake out and then get up. And what we had here, we had this weekly level. And this is very important, and we're gonna discuss this as well in the market structure today. So if you notice the price here, went down, test the weekly, and then bounced up strong. So I remember on the stream, so on Wednesday call, I was saying if the price break this low channel here, the price is most likely go down to the 36 area and then this area. Why? Because I had the weekly here and the monthly here. The price went down, I longed this, and on the stream last week, I said I longed this, I took profit, and I was expecting the price to at least swing failure this. So I was expecting, to be honest, I was expecting the price to go down, take the 36 liquidity like this, and then go up, which didn't happen. And I'm still in that long. I added to it up. I'll explain later why. So what happened here? Why did Bitcoin bounce from this 36 level? If I go down to the weekly chart, it's really, I don't want to say simple, it's not simple, but so Bitcoin was in this massive downtrend on the weekly. It closed 2 weeks ago on this level, which is 36,270, and then bounced back. So the second week candle back tested this week. So for a bullish strong uptrend, you don't want this week to break. For sure it can dip on it on 15 minutes and go up, but what happened here, because it was really strong, the price touched this weekly level and bounced strongly from it. How strong from it? If we go down to the 15 minutes chart, that's how strong it bounced. Or let me go to the 1 hour. So the price bounced from the weekly, and then it bounced literally 25% from that weekly. Why it's important? Because that's the weekly market structure, which we're going to discuss today. So Bitcoin put the low on the weekly, closed here, back tested it, and continue up. This is a bullish sign. So that's why Bitcoin bounced from this. So now where is Bitcoin? What happened after that? So we were talking about this bounce in last week's stream. It went up. So we were discussing the different channels. So if you remember, Amjad, hello. If you remember, we were talking about these channels. So let me look at this channel. So we had a channel here. We had a channel here. So Bitcoin bounced from the weekly up to this channel, back tested this channel. Remember, I was telling you on the weekend that I'm out last weekend and I'm not trading this. But what happened is I took the long from here. I took most of the profit here because I was expecting lower. And then I blindly doubled my long here. So now my average buy is around 38 here. And then the price back tested this channel. So what happened here on the lower time frames? Let's go to the 1 hour. So the price bounced from the weekly, went to this old channel, this channel from January this year, closed inside, back tested that channel up to the middle of the channel resistance perfectly. And then after that, reclaimed the middle of the channel up to the top of the channel and now is rejecting. If you notice, even now as we speak, is still respected, it's rejecting from this channel. So where did it reject it from? So this channel was reclaimed, top of the channel, and here, let me just go. Swing failure this, with some drama. Swing failure this, again, try to break. It was trying to break the 46 yesterday, but didn't succeed with. And I'll go more detail into that. So now the price is back into this channel. If I look at the volume in that channel here, the price is now above the value area high of the channel, which is good because we have the value area high here. We have the point of control, which was rejecting. If you notice here, the price was coming to the point of control, rejecting. Then it broke up, back test the point of control. This is the point of control, just to be. So back test the point of control up. So for now, the price is still above the value area high, which is good. That's what you want to see. Because if you saw acceptance under this value area high, then you're looking at the point of control, then you're looking at the value area low, then you're looking at the low of the channel. So this is how it goes. So for now, the price it doesn't look bad. I'm personally short from here. What is this area? Why it was rejected from here? This is the most important question. So this range, let's look at this range. So if you noticed here, we had this range from last year. So in December, remember when I was on holidays, I was telling you about the 52 short here. So Bitcoin spent in this range almost a month, more than a month. So the price now came up to this range, rejected, back up, tried to break this range, rejected again, and now here. So the price is rejecting from the range. So it's back testing the range and rejecting. So this is what we want to see. If you're bullish, you want to see this range reclaim and then up. Same what happened in this range. So what happened here? The price came up, reclaimed the range, and now it's on the top of the range. So now we want to see the range again, and then this range, and then up for a bullish upside for Bitcoin. So the price is rejecting from this range. What's next? So next, if the price could reclaim this range, next is the POC here, then middle of the range, value area high, then the top of the range, and then we look at higher. If it managed to do this, the most important resistance is around the 58 area. So this is in general what's happening on Bitcoin. Hello, Patrick. Hello. I don't the name is not clear. So that's what's happening on Bitcoin. Simple. 2-3 weeks ago, I was covering ranges. If you just look what's happening, it's really simple. And I took this long blindly last weekend when I was telling you I was away. When I saw the price end, I longed this range because I was already in a long from low. So I doubled my long this range because now accepted this range. So the same thing here. If the price closed 1 hour, 2 hour, or 4 hour above this range and then back tested it and you see strength, this is a good. That means acceptance inside the range. So this is the whole idea that we always cover on Bitcoin, which is trade the range. It's as simple as that. It's not simple for sure, but so we had the lower range, the one we were trading here, broke up from the range. Bitcoin went to this range little bit, and now it's still trying to break the range. Important something here, and this is something I'll cover because especially for Amjad and the guys who's trying to do day trading. So the price came to this low of the range. There was a lot of volume here. Bitcoin spent 30 days here. So you expect a lot of volatility here. A lot of people who bought, who want to sell, a lot of people who want to short. So if we come down to the 15 minutes and we look at the volume, so the price came up to the range. There was like not that much volume. Price came down. Price came up here with a good candle. So yesterday with the volatility that happened. So the price pumped here, mostly are liquidated shorts, but still the price pumped. When it reached the resistance, you see there's no volume. The volume was dead. That's why I took this short. The volume was so dead. You cannot break such a massive resistance. Why it's massive? Because that was the low of the channel that Bitcoin spent 30 days in. So you expect this level is a massive resistance up to 46. So this is a massive resistance. And what happened here, price reached this massive resistance and simply there was no volume. You can't break through such a level with this volume. You need a volume, you need buyers, market buy. That's the only way you can break a level. So what you really want to see here now is volume to come in. Still volume is dead. Look at the volume. Volume is dead. What you want to see is volume to pick up and then reach this level with a spike in volume. So we want to see a couple of these volumes on the 5 minutes. That will help to spike. And when it's spike the volume, the volume spike and break the level, then you expect much higher because of the short liquidated and the short closing. So that's all on Bitcoin. I don't want to spend a lot of time here because I want to go through the most important topic of the day, which is the market structure. So let me know if you have any questions and then I'll go through the market structure. So market structure. I'll start with the market structure now. I need to record this so I can put it on YouTube for everyone. So now I want to discuss the topic, this week topic on educational content, which is market structure. which I think is the most important basic TA, or what I call it the ABC of anything. Technical analysis, investment, whatever you do, market structure is the most important. Why is that? Because if you are a scalp trader, then you look at the market structure on the 1 minute, 3 minutes, 5 minutes, 15, 1 hour. If you're the day trader, you look maybe at 15, 1 hour, 4 hours. If you're a swing trader, you look at the 1 hour, 1 week. So regardless what kind of trader you are, if you're an investor that want to invest for months to come, you look at the market structure. So market structure is really the basic ABC for any kind of trader or an investor. I have to say, it is the most important thing, but we don't give it enough attention. Personally as well, I didn't give enough attention for market structure. And now my rules in trading, which is this paper here, it always, for example, I'll trade swing. I have it as a rule. Swing with the trend or the clear reversal. Daily market structure change, get out of the trade. So now I know if I'm in a swing trade on my alt, if the market structure changed on the daily, I'm out of my trade. So this is some rules based on the market structure. So this is how important for me personally, market structure. And I think if you want to become a day trader or an investor or a long-term trader or swing trader, position trader, this is the most important, or the start of anything you do in charting and technical analysis. So I'm going to put this full screen. I'm not going to see the questions after that, and then we're going to go through it. So what we're going to cover today about market structure. First thing, what is a market structure? The different type of market structure, how to identify that the trend changed, and what's the importance of the market structure. Then I'll go on the chart and show you some examples, live examples. So we start with what is a market structure. So as I was saying, the market structure is what defines or what tells you what is happening in the chart. So the price in general can go up or down or sideways. As simple as that. That's the market structure. It's either up, uptrend, or down, downtrend, or sideways, which we call consolidation, or range bound. So these are the words you hear usually. So now I put the chart of Bitcoin on the weekly. Let's go more. Let's go on the monthly. This is a log scale monthly Bitcoin chart. This is a very nice uptrend. Why it's uptrend? Because it's just heading up. If you look what we have here, it's uptrend. So the importance of the market structure is show you the strength of the asset you're trading. So let's say you are a long-term holder on position trading on Bitcoin. You saw this here in 2013, you saw the drop, and you will, you know what, I'm buying here. So even on the monthly time frame, you're still good. It's still in an uptrend. We're gonna go more detail. So the importance of, so the market structure is what identify or tell you, make you understand more what's happening in an asset. So what are the different type of the market, of market structure? So we have uptrend, which is so simple. You have a low, a high, then you have higher low, then you have a higher high, higher low, higher high, higher low, higher high. So you see what's happening here? It's an uptrend. So each low, we're having a higher low. Simply, it's uptrend. I'll go more details in the examples. So this is a very simple uptrend. For sure, the uptrend doesn't have to be always that clear. Sometimes it comes down here, it plays around a little bit, then uptrend, consolidate. It depends what the time frame you're looking at. So if you're looking at the 5 minutes time frame, for example, things are different. So if you're looking at the 5 minutes time frame, the price can go downtrend while the 1 hour is uptrend. Same thing happened on the monthly. For example, on the monthly of Bitcoin, let's give you an example here. So on the monthly of Bitcoin, it's almost an uptrend since Genesis. So that's the monthly. But if I go now on the 1 hour chart, it's in downtrend. If I go on the 15 minutes chart, it's an uptrend. So trend is different on what time frame you're looking at, and this depends what kind of trader you are. If you're a scalper, you're looking at the 5 minutes, you'll be like, you know what, it's still an uptrend, but once this is broken, then you'll be like, okay, this is downtrend. So for a 5 minutes, he's looking for a short somewhere here. But for a 1 hour, he's looking for a long somewhere here. For a 4 hours, in this case now, it's still uptrend on Bitcoin in the 4 hours. On the daily, it made a higher high, slightly, might be a bear trap. But if we go on the weekly, now we have a lower low, so shorters are looking for a lower high somewhere here. So it all depends on the time frame you're looking at. So and that's the downtrend. It's just opposite to the uptrend. In the downtrend, you have a high, a lower low, lower high, lower low, lower high, lower low. I'll go more details in the examples. So this is a downtrend, simply it's down. This is an uptrend. Then we have consolidation. So I can say most of the time, most of the assets are in consolidation, which means not uptrend, not downtrend, simply sideways. Sideways is a consolidation. So for example, you have a low, a high, equal low, equal high, equal low, equal high. This is what's called a range that you see. You notice I talk a lot about the range. It doesn't have to be equal high, like so perfect. This is actually how it usually looks like. So high, low, lower high, lower low, higher low, and then change and then change. So let's take an example of that. So let's go to what I was covering just now on the Bitcoin. So I even called them range 1, range 2, range 3. Let's take range 2. So here we have this range from back here. Let me remove this just to make it easy. So what we had here, we didn't have a real uptrend or downtrend. So it wasn't an uptrend or a downtrend. It was simply the price was going, it was downtrend and then low, lower high, lower low, and then higher high, and then higher low, and then lower high, and then higher low. So it's not really a trend. There is no trend here. There is no clear trend, because for a trend, what you need to see is high, for example, uptrend, higher low, still not uptrend, higher high, now it's confirmed higher low, now it's an uptrend. So you need to see the 3 touches. So high, low, higher high, now you have a trend. You expect a higher low. So this is a trend. In this case, there's no trend, it's sideways. The price was going down, then up here. Yes, it made a higher high, and then higher low, but then made a lower high. So there was no trend, and this is the sideways consolidation. If we look at this, Bitcoin spent around 14 days just going sideways. There is no clear trend. After that, now we have a downtrend because the price made a lower low. And then spent here in this range, where I call lower range. So price spent here, same thing, where we had low, lower low, and still a lower high, higher low, lower high. So there's no trend, no trend, no trend. Price broke the range, and now you have uptrend on the 4 hours. So you expect higher. So the price spent another 14 days just sideways. So this is why it's so important to identify what trend, because the market or the strategy, the way you trade the trend, completely different. So for example, in the downtrend, you trade differently. So price broke here, you took the short, you might not take profit, your stop is here, you play the stop. So I will not take profit, or I'll take some profit here, but then if the price became uptrend, I'll close my trade. As long as it's downtrend, I'll not close my trade. Let's say you did this here, in this range. The price broke this, you took the short, and you were like, you know what, this is downtrend now. If I go on the daily, let's say you took this short from here, which I took at 58, and the price broke this range. Okay, you took profit at the low of the range, and then the price broke, you'll be like, you know what, I'm gonna hold to my short until I see an uptrend. And then you will hold to your short, because what you had here is downtrend on the daily, downtrend. And then now you start thinking, you know what, it's time to close the short, for example. And that's why you see price of Bitcoin here start going up, because all these shorters will be closing. In general, same thing happened here. Let's say you took the short, price broke down, so now you're downtrend, 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 downtrend. There's no strength. So the strategy here, if you're looking at the 1 day market structure, your strategy will be, I'm gonna hold my short until I see strength. Strength as higher low, higher high. If Bitcoin go down here and put another higher low, then you'll be like, you know what? This is showing me strength. Or you will be like, you know, I want this resistance to be taken. So in general, back to the topic, the price spent more time sideways than it spent time trending. So there's more time spent on the sideways. And these, for a day trader or an active trader, these are nice trades, because you can trade these ranges. You trade these ranges, trade these ranges. Let's see what's happening here on the 1 hour on Bitcoin. So on the 1 hour, look what we have. Price came up to this 45, down, down, down. There's no real trend, uptrend. Uptrend on the 1 hour broken, then back tested, swing failure this, down to the low of the channel, and now back up. So the price has been in this area since 3 days, just consolidating. We don't have a clear trend on the 1 hour. We don't have a clear trend. So this is called range trading, and identify what market structure is. Is it uptrend, downtrend, or consolidation? Helps you with the different strategy. So let's say you took a long from here, playing the range. You took profit here, here, and then the price broke above this, back tested it, went up, and now you have uptrend. So then you'll be like, you know what? I'm holding my short. I'm not gonna take profit. Why? Because it's an uptrend. For example, in my case, I took a short from here. My average buy is somewhere here. I took profit, and then I stopped now. Because if I see the price broke down, I will not take profit. I'll wait for lower. If I see now the price putting uptrend and strong, I'll close my short. So identifying the trend help you the trading you're doing. Same thing if you are a long-term holder in Bitcoin. We go back to the same thing. If you're doing the monthly chart on Bitcoin, you're good. Why? Because you are still in an uptrend on the monthly. I'll go through more details on this in the examples. So this is the difference of the different type of market structure. Uptrend, downtrend, and simply sideways, or consolidation, different names. Trend reversal. It's simple. The price is low, doing high, higher low, higher high, higher low, higher high. So this is a clear uptrend. What's happening after that, the price, let's say, goes sideways. For sure, there's no perfect example like this, just to explain the idea here. So the price goes sideways, 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 and then it broke down, and then we have a downtrend. It's a little bit tricky how to identify uptrend or downtrend, and that's what I'm going to cover now. But in this case, these are the three different types of trend. Uptrend, sideways, downtrend. Usually you see them like this. For sure not that clean, but usually you see like that. We're going to go through this. For example, this is, if you notice a couple of times you see me using such tools, but this is the importance of them. You have a low, high, higher low, higher high, higher low, higher high. You see this trend line? Higher high. And then the price broke down and made a lower low, and then price made a lower high, and then another lower low and lower high. This is the point here you confirm trend reversal. So in this point here, you know, okay, you know what, this was uptrend and now it's turning to a downtrend. Same thing here, the opposite, high, low, lower high, lower low, lower high, lower low. Price broke this resistance and then back test higher. So now I have higher high, higher low. And then I have another higher high, and now I have a trend reversal. How are you gonna trade these? I'm gonna go through this because it depends what kind of trader you are. Like yesterday, I shorted the 1 minute lower high. So back to the point, why I was hyping a lot the market structure and why it is really that important. So I know most new traders, and I was one of them, we look at these. Okay, let me ask you a question. What are these? Someone answer me. Amjad, Ali. I'm sure you guys know these very well. Now, the delay on YouTube is... So try to tell me what are these and what is the common between all of them? What's the only one common thing between all of them? Everyone shy? So here we have a different type of, I'll wait for the answers. Here we have different type of patterns. Everyone loves patterns. What's the most, or what's the common between all of them? Patterns are really just a way of the market structure. So you have bullish patterns and bearish patterns, reversal patterns and continuation patterns. So if you notice the difference, because usually they identify patterns as continuation pattern. Yes, Ali, they're patterns. So the common between them, and that's what we go. So you have continuation patterns usually and reversal patterns. And you have all these crazy patterns. And if you follow my analysis always, I don't like patterns a lot. I always say that it's not about the pattern, it's about the market structure. And I changed my trading style. I look at patterns, I respect them, but for me a pattern, and I'll give you an example. Let's take head and shoulder example, which I think in crypto it works very nice, especially on the low time frame. So this is a reversal pattern. What means by reversal is reversal. So the price was downtrending and now it's uptrending. Let's look at it more. The price had a high, low, lower high, lower low, lower high, lower low, equal high, higher low. On this higher low, you'll be like, now I'm seeing something changing. And then you have a higher high. And then you have a higher low. So if you are a pattern trader and you're trading this pattern, you buy here usually. This is the buy point. Why this is the buy point? Because this is the confirmation of a trend reversal. So regardless what the pattern is, we had a clear downtrend, then we had a clear trend reversal. If you come here, the trend reverse on the back test of the second support. So if you come here, that's the last low, high, higher low, higher high. Still, it's not confirmed trend reversal. When you touch this and bounce, this is a confirmed trend reversal. So what this pattern is simply a trend reversal pattern, and it's called a trend reversal pattern. And you notice sometimes I kind of comment these when the price in Bitcoin is going up and people say, oh, this is an inverse head and shoulder. It cannot be an inverse head and shoulder in an uptrend because it's a reverse pattern. So what an inverse head and shoulder is a simple confirmation on a reverse pattern. So let's say you don't know anything about patterns, you know only trends. Let's say you are a trend and now you'll be like, okay, perfect, I have my first higher low, I have a higher high, and now I have another higher low confirmation. Then this is trend reversal, I'm going long. So you're longing this, same as a pattern trader because you saw the trend reversal. Same thing on the head and shoulder, which is another trend reversal, but this time from the uptrend to the downtrend. So the price make low, high, higher low, higher high, higher low, higher high. Then you have slightly higher low, but then you have a lower high. Then you broke this, and now you have a lower low. Still not a trend reversal. You made a lower high, confirmed, this is a trend reversal. There's the point that you take the short on the pattern, if you're a pattern trader. But if you are a trend trader, there is also where you take the short. So regardless what the name of the pattern is, they all follow market structure. Let's take another example, which is, these are my favorite patterns in crypto. These are the patterns that work. I'm not covering many things. I'm covering mainly these that works. So what do we have here? I'm not going to ask a question because I have to wait 2 minutes, 10 minutes for YouTube. But anyway, so we had an uptrend and then low, lower high, higher low. Do I have a trend? No. I have a lower high, but I have a higher low. Do I have a trend? No. So what do I have here? I have consolidation. This is a consolidation because the symmetric triangle is a consolidation pattern and it can break up or down equally. So this is consolidation. Another one, ascending triangle, which is in crypto one of my favorite. High, low, equal high, higher low. Okay, higher low is bullish. So now I have an uptrend. But no, I don't have an uptrend because I don't have a higher high. I have equal high. So this is not an uptrend, but it's not a downtrend because I don't have a lower low. So what is it? It's consolidation pattern where you keep consolidating, 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 or accumulation, accumulation, consolidating, and then you pump. Another example, descending triangle, price, low, low, and downtrend. High, equal low, lower high. Okay, now we have a downtrend from this side, but this is not a confirmed downtrend because I don't have a lower low. So it's not a downtrend. It's really a consolidation. So all these three patterns are consolidation when it comes to market structure. These patterns, they're called reversed patterns. Why? Because they reverse the market structure. And if you are a Elliott wave. So I don't know if you know about Elliott wave strategy. I don't know Elliott wave, but it's all based on the market structure. If you trade a harmonics, I don't know if you know about harmonics. Let's say you're trading a here. Let's say you're trading a they call it a shark harmonic, something like that. So it's all about market structure, uptrend, downtrend. So everything in TA is kind of market structure. Even Fibonacci is based on market structure. So market structure, that's why I refer to it as the most important part of trading. So if you are a trend trader or a Elliott wave trader or whatever kind of trader you are, you should take in consideration market structure, which is the most important thing. This is kind of fast going through market structure. Now we're going to go with some examples, go more in depth of showing you some examples. So this is better to draw here. So let me go. Okay. I don't know, I didn't look at the chart, it's a long time, but what I have here. That's a nice test of this. Anyway, let's clean this and go through some examples. Some important examples for you to know about. So one thing, let's start with uptrend. So we have a low, high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. You notice in this case, you see this a lot, what's called that trend line. So what you do here is you connect a line between all these structures. So either here or here. That's called a trend line, which kinds of give you a feeling of how strong the trend is. If a trend line is this, that's exponential strong trend line. If the trend line is like that, that's a weaker trend line. So the trend is more weak. Why it's weak? Why we think of it like that? Because it's all about support and resistance. So let's take that. We start from here. So this is resistance. And then we have here support. And here resistance. So what was happening here? The price came up, rejected from resistance, back to support, up to resistance. For a stronger uptrend, you need to see this hold, the support hold. Why? Because the sellers here, this is an SR flip, support turn to resistance. So you really want to see this level hold as support. But if the price went under it, this is still fine. As long as this level is hold, you're still in uptrend. So this is the first example. Let's say the price went down, fine. Then it broke up to this resistance, back down, support, broke the resistance, and then back tested, let's say here. So these are called support resistance. They help you a lot when you're trading. Let's say you took a long, okay, let's keep that. And now the price, so the first question is, or the first point I want to tell you is, if the price now came down, I want to put this here. So we have a clear trend line. If the price go down here and then broke this trend line, some people always think of this wrong. Oh, the trend line is broken, that means we're not anymore in an uptrend. Why? Because the trend line is broken. But it's not the point. The point is the last support. As long as this line holds, it's still in a very strong uptrend. So the price can come down here and go up because this is still uptrend. If the price rejected up from here, you'll be like, okay, now I have a lower high. So now I have a lower high. And then the price broke this. Okay, now I have a lower low. And then the price back tested this as resistance. And now I have a confirmed downtrend. What is this? This is simply where is it here? This is simply a left shoulder, head, and right shoulder. And now we have a confirmed head and shoulder. Regardless what the name of the pattern is, what do we have now is the last high, then we have the last high, then we have a low here, then we have a lower high, lower low, and then another lower high, and now I have a confirmed downtrend. So a couple of points here with this example. If a trend line is broken, that doesn't mean you lost the trend. You lost the trend line, but you didn't lose the trend. You only lose the trend once the support or the last low is taken. Even to here, you didn't lose the trend. Why? Because this could easily come back here and do something like that. You lost the trend line, yes, but then do like this, and like this, and like this, and then break up again. The price can simply go in a sideways, which usually do, and then broke this sideways up. So breaking a trend line doesn't mean you break a pattern. What you need to see for a trend reversal is a lower low from the last support, and then a lower high, and then another lower low, and this is now a confirmed trend reversal. This is very important. So let's take the same example. Let's remove this. So what do we really have here? We have resistance, and after breaking the resistance, what means resistance? Sellers were selling here, buyers were buying here. Price broke this, and then people show interest here. Why? Because this is SR flip. So the support, the resistance now is turning to support. So buyers jump in here, and then price go up. So now for me as a trend, okay, now this is fine. I don't want to see this break. Why? Because this is the support now. So price go up, higher high, then higher low. So it seems sellers jumped in here. For a stronger uptrend, I want to see this above that. But in this case, let's say it was here. So now this was resistance before. So it's turning as support. Swing failure this, and then price bounced up. So now this for me is what's called the low that I don't want to break. So this for me is perfect. And then what I have here is this resistance. Break it, test it as support. No, it broke it. So I start see weakness in my chart. Still the price managed to go higher and reached here. So now this resistance, I wanted to act as support, and I want this to hold. This area, especially this to hold. So let's say now the price continue up, and then came back here, tested this, but broke it down. Are we in a downtrend? I'm not gonna wait for the answer because of the YouTube. We're not, because my resistance is, my support is broken here, but this was a resistance. So yes, it was broken, but still my low is holding. So if the price came all the way and do this, and then go back up, so I'm still good. The only time I start thinking, okay, something is not adding up, when price break the resistance, and then so this is the importance. What are these yellow lines I was drawing? Let's say you took long, and this is applied for a 1 minute or 1 month chart. Let's say you took a long, let's play it conservative. You took a long somewhere here. So now this is the support. You'll be like, okay, my stop is here. If this break, I'm out. Then this is your support. Then this, so this helps you identify the market. An important thing, we don't trade off market structure alone. We trade off levels. What I mean by levels, I go back to, this is my trading chart. So when I was longing here, I was longing the monthly 33,100, and this, so I bought spot around 35 because I had a strong monthly level here. When I was taking this weekly long last week, I wasn't working off the market structure. I was working because I have a support level. But if you see it, okay, now I have a high, high, low. If this level hold and this broke, I have a potential uptrend on the 4 hours. And that's what happened. The price managed to get out from my support area, put a high, and now it's an uptrend on the 4 hours because not yet confirmed. Now it's a higher high. So this is, sorry, 24 hours. I'll go to the 4 hours. I remove this, I remove this, I remove this. Okay. So on the 4 hours, I wasn't longing here based on the market structure because the market structure was higher high, but I broke this. And that's what I said, it's a bear trap on the weekend. I told you this is a bear trap after the breakout. Why it was a bear trap? Because we had a low, high, higher low, and a slightly higher high. So this is kind of a confirmed uptrend. And then I had a higher low and then another higher high. So this is an uptrend. Perfect. Price went lower low. That means the market structure is breaking, but it's not confirmed reversal yet. You want to see a lower high and then this break, and then this becomes a downtrend. So why it's called a bear trap? Because this is start to look as a downtrend. People who short all this area here because of the lower low on the 4 hours get trapped and they were squeezed out of the position, and then you get this strong pull up. So that's why it was. Did I know this? No, I was longing support and thinking of a bear trap, which happened here. On the other side, if I look at the 24 hours, what do I have here? I have price made a higher high on the daily, but you see almost made a higher high on the daily. And now it's rejecting from this daily part. You see this daily level? If you see now, it's rejecting from the daily level to the dollar. So what do we have here? We have a potential higher high on the daily. Perfect. Now we want to see a higher low. If we saw another higher low, another higher high, this is a confirmed uptrend on the daily. If we see price come back here, do this, then come up, then do this, and then we are on sideways consolidation. Let me go to the monthly chart and put it on log scale. Or let me go to the 1 week chart. So on the 1 week, on Bitcoin, what trend we have now? We don't have a trend. We have a low, high, lower low, and then lower high, then higher low, then higher high, but then higher. So we don't have a trend. There's no clear trend here. What do we have really is a consolidation or sideways. If you look what we have here, it's simple. I explained this in the Bitcoin analysis. What we have here is sideways on the weekly. So it's good to identify this on the weekly chart. So if you're a high time frame trader, let's say you're a trader who took this uptrend. Why? Because you had here a very nice uptrend. You had a low, high, higher low. That's how you bought here, the breakout of this at 13K. Why? Because this is confirmed uptrend on the weekly, and it broke the all-time resistance from 20K. Let's say you bought here. Why here? Because it broke this. So you have low, high, higher low. This is considered low, high, higher low, and now you broke this high. So now it's a confirmed uptrend. Let's say you took your long from here. And you're like, this is what's called trend trader. A trader who trade the trend. Once the trend is confirmed uptrend, they go long. And now you have completely another high, higher low, higher high, higher low, higher high, and then you have nothing here. Then you have still higher high, but now you have lower high, and then you have lower low. So if you're a trend trader, you'll be like, you know what, I'm out. But this is not a confirmed downtrend yet. So you'll be like, okay, lower high, lower low, then I have high. So if you're a trend trader that you went up from here long, you still don't see a trend reversal. But now you have lower low. So if you saw something like that, and then price take these lows, confirm, and then you go out of your trade. So see how relevant that is on the monthly or the weekly, as much as it's relevant on the low time frame. I know a lot of traders who do trade uptrend on a high time frame. They call trend trader. They only trade the trend. So they wouldn't trade anything here because this is nothing for them. Now, when they have uptrend, they will take longs and then they will wait. And even the volume will make you see that. Look how much volume we had here. And look how much volume we had here. Nothing. Because all these trend traders and the high time frame traders, they don't care about this. There's nothing here. This consolidation. There's nothing happening here. Anyway, this is another point. So how important is that? Let's go for example the 5 minutes. How to trade that? This is another point. How to trade this trend. So yesterday, as I was explaining now, there is this channel from back here. So we had this channel and the price was coming up to this channel. I first shorted here swing failure pattern. I took some profit and then I was stopped out here. The point is, for me, I was seeing weakness. There is no volume trying to break the channel. There was no volume at all. So I was seeing weaknesses. I had this level to watch. So I had this level, the previous highs from a couple of days ago. And if I go on the 5 minutes, here I was in a short, it was good, and then the price was coming up. We had high, still uptrend on the 5 minutes, higher high, still uptrend. The price came to the resistance, very weak, came to this, broke this previous highs. The volume was very, very weak. And here I was looking for shorts. Why? Because this is not a breakout volume. This is not a breakout volume. If you want to see a breakout, you want to see spikes in volume. So literally on the 1 minute, I can't. Okay. So on the 1 minute, we're still uptrend. Then the price down, lower high. Here, the price was trying to, and was rejected from the Fibonacci on the 1 minute chart. Forget that. I took a short here, then I added it on it here after this break. Why? Because 1 minute up, low, lower high, lower low. Now I have a downtrend on the 1 minute. And I saw weakness. So I'm not shorting because I have a downtrend on the 1 minute. I was shorting because this was a massive resistance. This was a swing failure pattern and there is no volume. If I want this breakout to hold, when it's back tested here, you want to see a spike. There was no spike. It back tested this, the blue line is the previous highs, swing failure. It back tested them on the 1 minute chart. It back tested this fine with no volume. Actually, you have selling volume, not even buying volume. So you don't expect something to happen. So I shorted here, stop above this, stop exactly, I have it at 46,070, somewhere here, 46. And then price came down and then test again. And when it broke here, I tripled my short. So I had a small short from here, but I tripled it here because I was like, this is very weak. It looks very weak. It seems not only I did this, many traders did this, and the price went down. So even on the 1 minute, when I saw the market structure change, I was like, okay, this is not breaking out. If this is breaking out, I need to see strength, I need to see volume, and I need to see the market structure hold. So on the 1 minute chart, I took a trade that I took profits fast, but now I am still in 25% of my trade for a potential lower as a hedge. That was the 1 minute chart. But it's so important always to keep an idea of the big picture. So, and that's very important one, especially for me shorting here, the big picture. This is the 4 hours chart. I'm still in an uptrend. On the 4 hours, I'm still in an uptrend. high, low, kind of higher high almost, and now it's trying to put a higher low. But what you see here is weakness. You see here, that's a good trend, that's a fast trend. Here you start seeing weakness. When price almost putting a higher high which is very close to this high, and then a low which is very close to this is weakness. That doesn't mean it can break up. It can range here in this range, this range. It can range here for some time, but now it's not a trend anymore, it's more a consolidation, because the highs are almost close to these highs, the lows are almost close. If you remember this, equal highs, equal lows is consolidation. So here we start seeing that. We start seeing consolidation here. This can range for days, this can break today or break up today. So you need to see volume for that. Same what happened here. You range, you break. And this is the point about Bitcoin. Once it break, it go to a trend, it goes strong. So it broke the trend, and in a couple of, how many hours? In 5 days, it jumped 18%. Same thing happened here. Once the range broke, once the downtrend, it went down in 1 day 19%. So in other asset you don't see that massive strength, but in Bitcoin you have all these 100x and 50x. So liquidation is much more. So that's why you see massive movements. So this is the importance of trend. You can use it on the 1 minute, 10 minute, 1 hour, 1 month, 1 year. You can use an uptrend. Let's take an example. I never look at that, but let's look at that. Let's look at the S&P on the monthly. So that's the S&P on the monthly. I have these trend lines. So I have trend lines already drawn from before. So that's the S&P on the monthly. It's kind of in a nice uptrend. Here we had a lower low, but then continued up. Low, kind of lower high, lower low, then continue up. That's why they say the S&P, if you're looking 10 years from now, 20 years from now, it's a good asset because it's in a massive uptrend. If I look at it at quarterly, I can't even see a downtrend. It's almost uptrend always. If I look at it at, it's almost always uptrend. If I look at it at the 4 hours, it's in a downtrend. So completely different what you're looking at. That's it. I'm gonna take your questions. If you have any questions, write them down about market structure. I'll take questions for 12 minutes and then we'll call it a weekend. Look what's happening with my trades. Someone is asking me for Bitcoin, what's level I'm looking at for Bitcoin. On the lows, I'm looking at around this level for potential scalp here. So I'm looking at this level around 41. So for Bitcoin, what levels I'm looking at for the downside or upside? So the upside I mentioned, I'm looking around this area. So 47. So 47, 48, and then the 50s. But on the downside, since it's now in a downtrend on the 1 hour, I'm looking at this area around the 41 down to here. So even swing failure, these lows is fine. So 4900 to 41 as a potential good area for long if I saw strength. And then other than that, for a potential more high time frame or swing trade, I'll be looking at the 40k or 39. So I would like this level to be taken, this level here. So I would like this somewhere here, 39,500, 39,800 for potential swing trade if I saw strength. So I have a long from now 38. I'll add to it when I see 40k, around 40k. But this level, I think this level should hold for potential strength up. Ali. So now the questions for the trend. Do you think the trend reversal is confirmed? Do you think, Ali, what do you mean by do you think the trend reversal is confirmed? You mean Bitcoin? What time frame you're talking about? So Ali is asking, do you think the trend reversal is confirmed? I don't know exactly what you mean by trend reversal is confirmed. Are you talking about Bitcoin daily or Bitcoin 4 hours or Bitcoin 1 hour? Because it's completely different. Because at the moment, Bitcoin is a not confirmed downtrend on the weekly. It is trying to put uptrend on the daily, which is not yet confirmed. It's uptrend on the 4 hour, 10 hours, 8 hours, I think. It's now downtrend on the 1 hour. I think now it's uptrending on the 1 hour and 15 minutes. Okay. Let's break down what's happening on the market from a market structure point of view. Okay, let's do it together. Let's do it together. Let's go to a clean chart, close the chart, remove everything, and look at it. Okay. Let me record this separately. So question from Ali is, what do you think the trend reversal is confirmed? I didn't understand what time frame he's looking at, or the daily or Bitcoin, what level. So the question is, what's going on in the market right now? So let's look at the entire market from a market structure point of view. So I took the Bitstamp with loss history, and I'm gonna go to the monthly. Okay, let's start with the monthly. I'll put the log scale because of this craziness. So let's look at the monthly. What do we have here? Take this tool. Let's start. So what do you have on the monthly? Low, high, higher low, higher high, higher low, lower high. These are very tight, but still low. I would consider this as one line. Then I have high, higher high, then again still higher low, then a lower high. So now I have a lower high. Lower high means take care. It's not a market structure change, but it's potential. Then we have a higher low, with the virus dump. Now I have a higher, still I have a higher low, lower high but higher low. Then the price broke all-time high, and now I have a higher high. What do we have after that? So higher high, higher low, slightly higher high, slightly. So I don't consider it. Let's consider it equal high. Now we have slightly higher low on the monthly, or considered equal high. So let's take the monthly market structure. What do we have? We have a confirmed uptrend since Genesis almost, and we don't have it now. What we have here on the monthly level Yes, we have kind of a higher low on the monthly level, but for me more this looks like more like a sideways rather than uptrend. But what you want to see is either this monthly close under, then backtest this, and then you have a monthly downtrend, confirmed downtrend that you didn't see since the history. Or you want to see this break here, higher monthly, backtest, and then you talk about the 100K. This might take 2-3 years. So we're talking monthly, just to explain. This can take years to build. We spent, Bitcoin spent from the all-time high in December, in January 2018, till it broke it. It spent 100,000 days, spent like 3 years doing nothing. Still higher low, lower high, higher low. So this is sideways. You didn't have any clear trend on the monthly. You had a sideways almost. So this is the monthly on Bitcoin. Let's go on the weekly to see what's happening. So on the weekly, let's take from the virus dump. We have the dump. We have lower high, higher low, higher high, higher low. This is confirmed uptrend. Now I have a confirmed uptrend. See what happened after that. Spike, higher high, higher low, higher high, higher low, higher high, nothing. Then you can consider it lower high, lower low here, or still higher low. But then you had a confirmed lower high. After that, you broke the resistance, the support, and you broke down. And this is important. I want to take this more. What was happening here on Bitcoin? It was a massive uptrend. People were so bullish here. The open interest was in the billions. The funding rate was like plus 0.2 or something. It was crazy. People were FOMO. Look at the volume. FOMO, and then the volume died. So people were FOMOing here. And then Bitcoin make the first kind of lower low on the weekly. I don't consider it. It's still a higher low. But then it made the first lower high. Confirmed lower high. So the moment it broke this support, let me draw it like that. So the moment it broke this support here, why is this support is important? Because if you're still bullish, you're coming from a massive strong uptrend, high, higher low, higher high, higher low, consolidation, lower high. You want this to hold. Why? You want more consolidation than breakup. What happened here, the price didn't hold. The moment it broke this level, you dumped down 33%. I think it was in 1 day. It was in 3 days. So once you broke this support, it went down in 2 days, 40%. Why? Because it's that important. Because you broke and now you have a potential confirmed downtrend. So that was what's happening on the weekly, on the Bitcoin. You want more local? I'll go with the more local one. Ala, yeah, let me finish this and then you can type your question so I can take it after that. So let's go on the lower time frame, Ali. Let's see in the 1 day what's happening. Let's take it from the all-time high. High, still higher low, lower high. Same thing what happened on the weekly in last year. You have a lower high now confirmed. The moment you took a lower low here, the rest is history. Bitcoin didn't even do a higher low, and this was my mistake. I was longing these stuff here, expecting a higher low. Lower high, sorry. We didn't get that. That's how strong usually Bitcoin trend is. Doesn't give a chance. So the moment it uptrend, like here, it goes directly to the moon. And the moment it downtrend, so you have low, lower high. Once you broke this level here, the rest is history. Look what happened. Let's look at it more details. So you have this daily here that should hold. Why should hold? Because you're on the daily, you want a higher low. Yes, you had a lower high here, but if you had a higher low, you're still in potential sideways to uptrend. The only way you have a potential confirmed downtrend if you break the daily. What happened after that? Bitcoin broke this daily level and backtested it once, twice, and the rest is history. This is what's like really best hedge short you can take. Because if you're holding spot Bitcoin and you see this resistance, it didn't break even this daily on the 1 hour. Like it was strong resistance. Why? Because now we have a confirmed downtrend and the rest is history. Since that, higher low, you have a lower high, now you have a confirmed downtrend. And then you're still doing lower highs, lower lows, lower highs. Now you have a higher low, you have a higher high, but it's a very light one. You need to see like this, like something like that to confirm kind of a higher low. I'm looking for a potential nice, I don't like patterns, you know that, but this will be nice. If we have this, price come back here and then go up. That will be a nice head and shoulder pattern. That will look good. So that's what's happening on the daily. On the 4 hours chart, it was a massive downtrend. You have a smaller uptrends in between, but you have a massive downtrend. And now you start to have something. So you have high, higher low, higher high, lower low, but this was a bear trap. And then you have high, high, and now here you're consolidating. You don't want a lower low. So the moment the 4 hours close under this, let's say it closed, the 4 hour closes here. Backtest this, then you have a confirmed downtrend on the 4 hour because you have high, low, lower high, and now confirmed downtrend. You want me to go in the lower time frames? On the 1 hour. This is why I'm still in my short. Because on the 1 hour, we're building an uptrend, but it's weak. I see it very weak still. I think we have a nice channel here. Yeah, we have a nice channel here to trade from. This is a nice channel. I was trading the channel like this yesterday for all day. Yeah, this is a nice channel. So now on the 15 minutes, you're kind of putting still an uptrend. Low, high, higher low, higher high, consolidating, higher high, higher low. So you want to see this up, and then up. This is 15 minutes chart. Importance of looking at the low and high time frame. There is no trend change start unless the low time frame. So example, the 5 minutes. When the 5 minutes see a confirmed lower, confirmed downtrend, you see what happened after that. The 1 minute confirmed downtrend, then the 5 minute, then the 15 minute, then the 30 minute, then the 1 hour. Up to the 1 hour, they're all downtrend now based on, starts with the low time frame and then add up to the high time frame, high time frame, high time frame. So it doesn't mean you short every 1 minute downtrend. The point is, again, we don't trade off the market structure. The market structure show us the kind of what's next, but it doesn't. You don't trade off the market structure. You trade off support, resistance, of horizontal levels. That's all. Let me know if you need anything more. Ala, you have a question? Yeah, I'll do one more question. Okay, Ali. Ala, do you have a question? If no more questions, I'll call it a night, and happy weekend. Let me know if you have any questions. I hope this was clear. You can't cover everything about market structure. I tried to cover it, and let me summarize everything. So let's wait first for a question, and then I'll make a summary. Seems no more questions. I'll make a fast summary. So to summarize the whole thing about market structure, it is the most important tool if you're doing any kind of trading or technical analysis or investment. Always remember, we don't trade off the market structure alone. It gives us a bias. So you saw an uptrend, you saw a higher high, higher low, higher high. And then you look. So if you bought this, you're buying the support resistance flip. Let's say you have a Fibonacci here. Let's say you have a moving average. So you look at what confluence you have, but the idea is, you know, it's an uptrend. So you're more bullish. You know that, oh, it's better to take a long now because it's an uptrend. Why to take a short? And you find, oh, there is a lot of support here. I have Fibonacci, I have a moving average, I have a, a weekly level. I have a lot of support at this level, and it's an uptrend. I'm gonna take my risk. I long here, my stop under this, I'm gonna take my risk. So you trade off supports and confluence, and the downtrend, you trade off resistance. But the uptrend will give you a bias. So whenever you start trading in your day, you need to understand what's happening. So if you're a weekly trading now in Bitcoin, you're more looking for a short on the 50K or the 58K. If you're a 1 hour trader or 4 hour traders, day trading, you're looking at potential long in Bitcoin. So it depends what kind of trader you are or investor you are. You look at these. So it's important to identify a trend. This will help you with your bias. And remember, most of the time, it's not uptrend or downtrend. Most of the time, it's sideways. And sideways is a very good trade. Personally, I love trading the channels because the stop losses are very close to my entry. If I'm trading a downtrend, I short here, my stop is much higher. If I'm trading a channel, I short here, my stop is like here. So your strategy change with the market structure change. What you don't want to do is to be shorting here. For example, here, the price is going up, the price go down very fast, and everyone is afraid, and your emotion kick in, and then you short support. It's an uptrend. It's at support. You don't short here. Same thing, what happens in downtrend, which used to happen with me a lot. The price go down, you be like, no, it should go up, and you long here, and then you long here, and then you long here. It's a downtrend. What you're longing? Wait for a market structure change, at least on low time frame, and then think of a long. So this identifying in trend reversal is so important. The price is high, higher low. Let's say the price went down a little bit. Oh, this is changing, and you go short. While it's not confirmed yet, you need confirmation. The price came down, broke the lows, back tested the resistance. Now I have a lower high, then I have a lower low. Okay, now I'll be like, you know what? I'll look for a short. If you shorted here or here or here or here with your stop, it's clear your stop is here because you're shorting a downtrend, a reversal. If the price came up here and then confirmed, then it's not applicable anymore. So it's so important to understand when the price reverse or when the trend reverse. Everything you do in TA, all different patterns are based on market structure. It can be a reverse pattern like head and shoulder, an inverse head and shoulder, which is simply a reverse in market structure. It was downtrend, now it's uptrend. Or it can be sideways. In this case, there is no trend, it's sideways, sideways, sideways. So whatever, most of the stuff you do or most of the TA you do is based on based on market structure. Watch this stream again and again. Ask me questions in Discord if you have any questions. And I'm happy even next week if you want, I can go through more examples because this is the most important part. Thank you so much and have a good weekend. Bye bye. Thank you.